Hi everyone, welcome back to the podcast. This is Vinod here. Good morning. I hope you have a wonderful day ahead. It's a Thursday morning, one more day to go, and it's the weekend, the first weekend of the month. As I always say, getting closer to the end of the year and getting into the next one. So, what are we going to talk about today? What I want to talk about was Janali Jaya Durga Devi had sent me a message on Instagram, which I thought what I was going to share over there would be relevant for all of you. So I thought I'd talk wider audience for the same topic because I know a lot of you will be going through this. So the message was I bought Infosys shares at 1,000 Infosys shares at 9:30 during COVID. Now I'd like to buy a few more shares, but it's such a hard decision to buy at 1,320, 1,430. What should we do to overcome this bias? It's a very good question. Question is, you bought something at a lower price in the stock market. Now the price has unfortunately gone up and you don't feel like buying it because you bought it at a lower price and you find it very hard to buy it at this newer price. Though the company is still good, the PE ratio is good, everything is fantastic, nothing has changed, and even the price which has gone up is warranted because there's value in it and the margin of safety is still there. But what do I do, sir? What do I do? This, what you experience, is called anchoring bias. Anchoring bias is a human tendency which we all suffer from, and we rely on the first piece of information which we encounter, and we anchor our mind, our emotions to this, making every consecutive decision from that point on much harder because you are anchored to this first price. In your case, the initial price of buying at 9:30, the Infosys share serves as your anchor, and buying anything higher above 9:30 proves to be, seems unfavorable and seems unfair because you bought it at a lower price. So how do you overcome this bias? That's a good question. Rational analysis is the first thing you must do. Rational analysis, you reevaluate the stock based on the current price, the fundamentals right now, and the future prospects of the company, rather than comparing it to the past price and what you did before. Don't. If the company's fundamentals have improved and its overall market conditions have changed in its favor, then the current price is probably justified. The same is true if the price, let's say, was at 1,000 and it's dropped down to 500. You won't immediately start buying it. You'll think, hey, why has the price gone down from 1,000 to 500? What is the reason? And you'll investigate. And after investigation, if you see there's a rational decision to be made there, that the price, maybe the market is overreacting to the news and there's still value there, and you might buy it at 500. Or you might be like, no, the market is right. There is no future in this, so that's why its price is collapsing. And you might be like, okay, even at 500, it's not worth buying. So that is called rational analysis, where you relook at the stock from the bottom and work yourself back up and put all the past information you had, the past things which brought prices you bought out, you throw it out of your mind. You be rational about it. Another way to look at this is to diversify. Instead of focusing solely on the price of the share Infosys you bought at, you try and diversify your portfolio and look at other investment opportunities. This will reduce your emotional attachment to Infosys stock and the historical price you are anchored to. By looking at other companies, looking at other sectors and their price points, you dilute your emotions, you dilute your anchor. So because most of the anchor comes from your own ego, thinking, wow, I made such a smart decision. When no one else was buying, I saw this beautiful object and I moved in and I swooped in and I took it. And now here I am sitting so pretty. That is where the anchor comes from. It's actually your ego, it's just playing with you. And your anchor is driven by that emotion. So by diversifying and looking other companies and diversifying a portfolio, you distract that emotion, you distract that ego of yours. So you can see, okay, and when you come back to Infosys, you'll be able to look at it with a fresh pair of eyes. The other way, third way, which I would suggest you can look at this, is the long-term perspective. If you are a long-term investor, which I am encouraging everybody in this channel to be, is to be a value investor, not to look at short-term price fluctuations. That should be less concern to you. And you focus on the company's long-term growth and the potential and the dividend yield you look at, like an Infosys company. Then you should feel rest assured. You should be like, okay, it's all right. I managed to get some at that price. Now I'll get some more at this price. But if I'm looking at 10 years from now, it won't matter, because where I'll be sitting so pretty when Infosys at 3,000 or 4,000 or even 20,000, this difference of 900 to 1,000 or 1,300 won't matter. So this is by looking at it long term, which is what I encourage all of you to do in every single purchase which you do. Look at it long term and don't look at short term gains. This is another method which Anand told me, which is the fourth method which I want to share with you, is called cost averaging. If you're unsure about the investing a lump sum, which is why Anand always says tea, coffee, why Anand keeps on saying this is what you do is you cost averaging you do. So you're unsure about investing a lump sum at the current price. So consider buying small amounts, buy smaller intervals. In regular intervals, you buy small shares of Infosys. You buy one today, two tomorrow, maybe a week later you buy three. So this approach, what happens is, over a period of a long time, your price is averaged out. So this bias which you also anchor bias which you have will also dissolve, because you're looking at your average cost and you're not looking at your one-time cost which you made. So this way, this mindset also, anchor bias is a way to overcome this. If all this is failing and you're still very stuck in your anchor, then I would suggest seek some external opinions. Talk to your financial advisor, talk to your fellow investors, your friends, people who are also investing. Get a fresh perspective on this, on the stock and its current valuation. Maybe that will help you shake off this anchor which you're holding on to, and can help you look at Infosys in a different way and look at the price at a different way. Simply being aware of this anchor bias can help you sometimes be rid of it by talking about something so vocally, and by the fact that you're talking about it with me on Instagram, you turn to become more and more aware of your bias and more aware of your ego playing into this, and then you're able to move away from it and look at it and get past it. But remember, past prices should not dictate your perceived value of an asset. Always consider the present conditions and the future potential when making an investment decision. And if you want to further understand how anchor bias works, we can talk about it. Just a simple example. One of the ways to look at it is to not look at it in terms of stock market, because we all suffer from anchor, and we not look at it in terms of money, because again, we won't be able to see that anchor so blatantly. Way to look at the anchor bias would be, let's say we're talking about, we go to a food festival, and when we go to this food festival, they have a desert section, and in the desert section, the first stall you come on has I know only South Indian desert, so I say paisam. So paisam, and it's so nice. It's perfectly creamy and it's so sweet. The cardamom and the ghee, the garnish, all the golden fried cashew and the raisins. It's done exceptionally well by the chef. And when you eat it, it takes you back nostalgically to your childhood, and you're very pleased, you're very happy, and you're very delighted with the paisam which you've had. Now that is your anchor. The quality of this dessert, this dessert did to you, the first stall, has become your anchor. Now you move on to the next stall. The next stall, you see some kesari, and you're still from the high of the paisam, and you eat the kesari. The kesari is nice. It has a nice texture, and it's good, but it's not as good as the paisam. You did not invoke all those memories which you had of your childhood and everything. And it's like, okay, it's pleasing, it's nice, the kesari, but it wasn't the paisam. So you're not so impressed with it. This is because of the anchor. Then you continue going down to the next stall. The third stall, let's say you find some janggery. Normally this janggery is your favorite. It's a sweet which you always go to when you go out for a snack with your friends. You like eating some janggeries. But for some strange reason, today's janggery in this stall is too sweet. Compared to the paisam which you just had, which sparked all this emotion, and the kesari after that, this janggery seems to be the worst of the lot. So this is what anchoring does. Because of the first paisam which you had, the initial fantastic experience which took you back to your childhood, which made you have this wonderful sensory experience, has shaped your subsequent judgments, making each judgment after that, though they were all very decent desserts and they were very nice by themselves, but because it's stuck to that anchor of the paisam, progressively each one becomes inferior. This is how anchor bias is there in everything we do. It influences our subsequent perceptions in a very negative way, or it can even be in a positive way. Another example for a positive way anchoring can work is, let's say I'm from Chennai. Chennai is always very hot and very warm. So I decide to go to an office break, and I take all my boys and we all go to Kodi. In Kodi, in this time of the year, Kodaikanal tends to be a little cooler. So the boys are expecting milder climate. The first day we go there, we'll end up going in the evening and it's very cold. The temperature is, let's say, at 10 degrees or 8 degrees in the night. And the boys are feeling very cold, and they're like, sir, you brought us all from Chennai and you said it's going to be nice, but it's pleasant, but this is very cold. We can't deal with this cold, and they're all shivering. So next day they get up, weather improves. Next day, the weather is not so cold and the temperatures are 12 degrees. The boys are feeling, it's much better. It's still much colder than Chennai, but because they were anchored at the first temperature of 8 degrees, the next day, those at 12 degrees, just a few degrees higher, they feel it's much more pleasant. The following day, let's say the temperature goes up to 14 degrees. It's still much colder than Chennai. They would have been finding it cold if it was the first day. But because they experienced the 8 degrees and 12 degrees, 14 seems to be very pleasant. They're all in their shorts and t-shirts and ready to play and move around. And they're like, sir, you're right. Cody is fantastic. The weather here is lovely. And that's how anchor works in a positive way. You are anchored with the first negative experience. Then consecutively, every experience after that, if it's even slightly better, becomes more and more positive. So this is how anchor works in the negative way, and it works in a positive way. So anyway, I hope I've answered your question from Devi from the Instagram, which you were talking about Infosys and the Infosys share price anchoring, and hope I shed some light on this. I hope all of you who suffer from anchor bias are able to move forward with this. It's very true, and especially in real estate, when you want to sell your property and you have anchors on your property, it's very difficult to sell and move forward from that. So I wish all of you the best of luck in this and overcoming your anchors and your biases. Thank you for joining me today on the podcast in the morning. I hope you have a wonderful Thursday, and I'll see you in the next one as we wrap up the week. Thank you.